U.S. stocks were well in the red today, maintaining a triple-digit loss. This on growing fears of a downgrade to the U.S. credit rating, which in turn triggered a massive sell-off. Now, first we take a look at today's economic reports, beginning with U.S. durable goods orders, which unexpectedly fell by a total of 2.1%. This after rising 1.9% the previous reading. Meanwhile, we also had the release of the Federal Reserve's Beige Book, and it did show a slowdown in the economic recovery, led by higher oil prices as well as a weak jobs market. However, investors today, as expected, were more focused on Washington, D.C. as well as the U.S. debt talks. And with the August 2nd deadline swiftly approaching, in less than 1 week, House Speaker John Boehner was forced to revamp his proposal after the Congressional Budget Board said that it would not cut spending as much as he previously claimed. Meanwhile, when you team that with a dip in technology stocks as well as crude oil prices dropping by more than $1.50, that paved the way for nearly 92% of the nearly 3 billion shares traded today to be well in the red. Now, taking a look to see how the Dow Jones has closed out this trading session, it is on the downside, nearly 200 points, 198.75 to be exact, to settle in at 12,302.55. In a breakdown of today's major market movers, we first begin with shares of technology company Juniper over at the NASDAQ, dropping more than 21%. This after its second quarter results missed estimates, while also offering a profit warning for the third quarter. Meanwhile, at the New York Stock Exchange, shares of Boeing rising more than 1.5%. This after the company easily surpassed expectations with a second quarter earnings of $1.25 per share. Back over at the NASDAQ, shares of Dunkin Brands, which is the parent company of both Dunkin' Donuts as well as Baskin-Robbins, rose more than 50%. This after pricing its IPO at $19 a share late yesterday. And in the earnings front, right after today's closing bell, Whole Foods Incorporated announced that its third quarter earnings per share came in at 50 cents, better than the 48 cents expected, and its revenue also improved, coming in at $2.4 billion compared to the expectations calling for $2.16 billion.